Right, hi everyone. Welcome to today's webinar brought to you by IC Markets. Right, before we start, welcome to today's webinar, and just please take note of the disclaimer. Right, this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs, as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Right, my name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, before we dive into the charts and trading view, we'll take a quick look at some of the key economic events that are lined up this week. It's all about inflation this week, right? We've got US PPI and CPI data out this week on Tuesday, 14th of May, and Wednesday, on the 15th, followed by the labor market report out of Australia on Thursday, 16th of May. Right, as you can see here, this is the calendar from Forex Factory, and take note, I'm on GMT time. So there's quite a few things going on, but I guess the main highlight is going to be on inflation data out of the US. So we have PPI data that's going to be released at 12:30 p.m. GMT time tomorrow. We also have Fed Chairman Jerome Powell speaking at an event in the Netherlands. That's at 2 p.m. GMT. And on Wednesday, we've also got CPI data at 12:30 p.m. GMT time, plus US retail sales as well. Right, there's of course Australia's going to release its labor force report on Thursday at 1:30 a.m. GMT, and of course we've got other data as well. Like we've got UK data based on which is going to be the labor force market data, labor force report, where they're going to report on the claimant count change, average earnings index, as well as the unemployment rate. All right, okay, so these are the key events to look out for. So now what can we expect from PPI, right? If you look at the recent data, PPI, which is producer price index, right? This metric measures the level of wholesale inflation in the US. So when looking at it on an annualized basis, we can see it has accelerated in the first quarter of 2024. Right, on the left I have the chart for headline PPI, and on the right I have the chart for core PPI, both on an annualized basis or year-over-year change. So you can see here quite clearly both charts illustrating the acceleration in PPI in the first quarter of this year. And somewhat worryingly, when you look at headline PPI, the monthly growth on headline PPI is expected to increase 0.3%, which is going to be higher than the previous month's reading. So we could potentially see another round of hotter than expected PPI data. Now, should that were to take place, it is quite likely this is going to boost demand for the dollar, and of course that would potentially mean gold prices falling and currency pairs like the euro, the pound, Aussie, and Kiwi all falling together as well. Right, when you look at PPI on a monthly basis, once again on the chart on the left I have is for headline PPI, and on the right is for core PPI. Right, as you can see here, January, February, they registered strong monthly gains, and March as well, but although at a slightly slower pace. So when we see here 0.3%, that's going to be here on the left. So most likely we could see PPI come in at 0.3%, or if it comes even higher than 0.3%, that's of course then going to have a major impact on the annualized reading as well. We're quite likely to see this re-acceleration in PPI increase further, and that would mean demand for the US dollar is very likely to pick up. Right, looking at CPI, it paints a similar story. So this is looking at consumer price index on an annualized basis or year-over-year change. On the left, I have the chart for headline CPI, and on the right is for the core. So as you can see here, acceleration is quite clear, going from 3.1% in January to rising as high as 3.5%. On the core reading, on the core reading side, we see it remaining unchanged at 3.8% in February and March as well, right? And if you take note, the Fed has an inflation target of 2%, and as you can see, headline and core CPI are well above this 2% target, right? With headline CPI at 3.5% year over year, and the core at 3.8%, both well above the target of 2%. So the Fed is definitely not going to cut rates anytime soon, unless we start to see inflation reverse and continue its downward trend as what we've seen throughout 2023. Now, when you look at the forecast for April's data with regards to CPI, you can see a somewhat stabilization in the figures, right, in the monthly figures, as well as a slight slowdown in the annualized reading as well. So we may potentially see inflation CPI data that comes in line with the forecast, or perhaps even maybe even lower than this forecast. Should that were to take place, then it's quite likely that the dollar is going to sell off, right? So the dollar sells off, then of course currency pairs like the euro, pound, Aussie, Kiwi are likely to rise along with gold prices as well, right? So take note, the forecast seem to be suggesting a stabilization in the readings and the monthly increases at CPI, which could potentially mean we could see the data come in line with the forecast. If that were to happen, right, that means we are likely to see the dollar sell off on Wednesday, 15th of May, right? Then also we can see CPI on a monthly basis, right? From October to November of last year, we can see a notable increase in headline CPI on a monthly basis, as well as for core CPI as well. But it has somewhat stabilized over the last couple of months, and should we see that stabilization continue for the month of April, then we may see the dollar sell off on Wednesday, 15th of May. Right, this could should CPI data come in line with the forecast or perhaps even lower than the estimates, then this is quite likely going to potentially function as a bearish catalyst for the dollar. Now, moving on to Australia's labor force report. Now, when we look at the employment change figures over the last 4 months, right, it's been kind of a mixed bag for Australia, right? We are seeing 2 months of declines while 2 months of gains as well, right? So it's been a pretty uneven or patchy job growth over the last 4 months. Now, looking at the forecast for April, April points to job gains of about 25,000, which is obviously much greater than the decline that we had in the month of March. Now, should we see the results come in line with this forecast or perhaps even a little bit higher, this could then potentially provide some lift for the Aussie dollar. However, when we look at the unemployment rate is expected to edge higher once more. It came in at 3.8% in March, which was higher than 3.7% the month before. Now, the forecast for April points to the unemployment rate increasing once again to 3.9%. Now, should that occur, we could that also would mean that the labor market is potentially starting to weaken or soften in Australia as well. So we could have a mixed results as well for the Australian labor market. So take note, should the data be mixed, it's going to be quite hard to judge how it's going to play out. Of course, we just have to rely on price action. But if we see, for example, data job gains exceeding 25,000 while the unemployment rate remains at 3.8%, a scenario like that could potentially cause the Aussie to climb higher. Conversely, if we see employment change miss its forecast while the unemployment rate comes in at 3.9% or perhaps even higher, that of course would then potentially cause the Aussie to sell off. All right, so this is how these are the key economic events to watch out for this week, right? I mean, these are the 3 highlights that I would like to point out. And of course, when you look at the main calendar, there's quite a few things going on as well. All right, okay, with that, now let's dive onto the charts and trading view. And of course, should you have we'll start the analysis with the dollar index, work our way through down some of the major currency pairs, the commodities, and also the indices. But of course, should there be any requests for any other instruments, do not hesitate to drop them in the live chat, and I'll be more than happy to go through the analysis with you. All right, okay, now we're going to start the analysis, of course, with the dollar index, right? I'm on a daily time frame here. So as you can see, it is currently trading around 105.26, right? This level here between 105 and about 105.20 is a strong support zone, right? This level at 105 is a strong overlap support, right? We see it finding pullback support here in the beginning of November 2023, making a swing high resistance here in the middle of Feb. So when this swing high resistance is made, this level then proceeded to function as an overlap resistance for the first time here in middle of February, and then proceeded to function as another swing high resistance or overlap resistance on the 2nd of April as well, right? And after price broke above it, we can see that it pretty much found support just above this level as well. Of course, we see the bottom of this wick dropping as low as 104.50, but generally you can see this level has held steady, right? We can see the body of the candle, right? This is a daily candle here, close above the overlap support that that still gives me a strong confidence that this level is pretty significant here, despite having this long wick. So that's how that's how the pivot has been identified for today, right? So the pivot is actually a strong overlap support that also has the presence of a 38.2% Fibonacci retracement, right? You see this retracement here. It's a 38.2% Fibonacci retracement. It aligns pretty well with the pivot here, right? So it's quite likely we're going to see it's been so far, I would say today has been relatively quiet, right? There's not much action going on, right? Price range has been relatively narrow, and dollar index has just hovered above 105.20 pretty much for most parts of today, right? So this support zone is likely to hold today and potentially tomorrow, especially with PPI data coming up tomorrow at 12:30 p.m. GMT. And should that data come in hot or hotter than expected, then that's quite likely going to provide the fuel for dollar index to bounce off this level here. So remember, if we see stronger than anticipated PPI data tomorrow, that's quite likely going to drive the dollar index higher off this overlap support and perhaps as high as 106, and then maybe beyond that as well. Now, however, if PPI does surprise to the downside, which maybe I think is quite unlikely, right? Well, let's just imagine that PPI does come in weaker than anticipated. That means that this support level is going to be severely tested, and we may see dollar index potentially break below this level here. Now, on the longer term, we can also see it is trading within a bullish channel, right? We can see that the dollar index has tested the upper trend line of this bullish channel several times, right? It came close to testing it here in the beginning of February, then again in mid-Feb, then of course as recently as, not recently, but in the middle of April as well. So you can see 3 times where this upper trend line has been tested. Similarly, on the bottom trend line, we can see it test this level here on the swing low that occurred at the end of the year, and also over here at the middle of March as well, price finding decent support here for a period of 4 to 5 days before finally bouncing higher. So you can see your price is still trading within a bullish channel, and although it is has retraced lower since the beginning of May, right? It is still part of this downward correction is still part of a larger uptrend that we can see quite clearly here. And also, if you were to look at the Ichimoku cloud, right? Okay, let me try and adjust the settings for the cloud. This is not very clear. Right, okay, this is a little bit better. Right, when you look at the Ichimoku cloud as well, remember, take note when the cloud is green in color and with the instrument, in this case the dollar index trading above the cloud, it indicates a strong bullish momentum, right? So the indicator is telling us that this index is still trading in a bullish momentum, and it is with the price trading above it here and also above this overlap support is we may see this uptrend continue, especially if PPI data comes in hot tomorrow. All right, okay. So this is how the overlap has, or the pivot point has been identified. First resistance is quite clear. It's simply this pullback resistance has taken place since the 16th of April, right? This level at about 106.30 to about 106.50 has been a strong resistance area. I just highlighted as a zone here. And also there's an intermediate resistance I like to point out as well, right? We can run a retracement, Fibonacci retracement from this high on 16th of April down to this low on the 3rd of May. I believe it's the 50 and 61, right? Right, this is a pretty decent intermediate resistance zone I'd just like to highlight as well, right? It is also a level where the dollar index ran into resistance last Thursday, right? You can see here, right? The dollar index reached a high of almost 105.70 last Thursday before retreating to fall back. So we do see an intermediate resistance that's bounded by, or that's identified by the Fibonacci retracements at 50 and 61%, while we also see a strong overlap at 105. So it's sort of consolidating between these two strong support and resistance zones. And should we see PPI come in hot, that may be enough for dollar index to break through this intermediate resistance zone here that lies between about 105.50 and 105.80. Right, so these are the key levels for the dollar index. And of course, on the support side, we see the dollar index making a strong pullback here on the 8th of April before bouncing higher. So this is a strong pullback support level here. Right, and this level, if I'm not mistaken, also has is there another retracement? Let me see if there's another retracement here. With a 38. I believe there might be a 61 here. Let me see. Right, there is a 61% just around the vicinity of that first support. Right, I'd just like to highlight that as well here. Here we go. Right, so the first support, which is a pullback support level, also has the presence of a 61.8% Fibonacci retracement, adding to the significance of this pullback here. And also is also a level that's slightly above the upper trend line of the bullish channel, as well as sitting above the bullish Ichimoku cloud as well here. Oh, well, for now, yeah. All right, okay, so these are the key levels for the pound. Let's look at the euro. Sorry, for dollar index. Now let's move on over to the pound, and I mean the euro, and then the pound, and then we'll cover the commodities and of course any other instruments that you would like me to go through as well. Like so looking at the euro, right, similarly here we can see it that it's trading underneath the bearish Ichimoku cloud, right? The Ichimoku cloud, when it's red in color, indicates a strong bearish momentum, and the cloud itself can also function as an area of resistance as well. So this is clearly quite seen here, right? From 11th of March till 11th of April, every retracement to the upside has been pretty much been restricted by the bearish Ichimoku cloud, and the euro has reversed to drop lower. So this is something that could potentially happen as well, which is why the pivot has been identified at 1.0781 over here. Right, there's also, I think, a bearish channel that we can draw, right? I think there's pretty much a pretty decent bearish channel that we can draw as well. Yep, here we go. Right, we can see that the euro has tested this upper trend line of this bearish channel several times, right? In the middle of March, third week of March, and we can even argue here, and in mid-April as well, it came close to this level before reversing to drop lower. Similarly, on the lower trend line, you can see it bouncing off the lower trend line a couple of times, right? Beginning of February, mid-Feb, and we can even argue here on the 16th of April, mid-April, price came close to this lower trend line of this bearish channel before reversing to bounce higher. So these upper and lower trend lines help us identify potential resistance and support and potential bearish reversals or bullish reversals as well, right? It helps us to identify the upper trend line. The upper trend line here helps us to identify suitable or high probability short setups. Conversely, as price is trade comes close towards the lower trend line, it helps us to identify high probability long setups as well, or bullish reversals down here and bearish reversals up here. So take note, not only do we have the upper trend line of the bearish channel, we have the red Ichimoku cloud as well as a pivot level here to identify a pretty strong resistance zone. I believe there may even be a Fibonacci retracement that we can use. Right, so I'm going to run the first retracement from here, 8th of March, going down to the swing low here on the 16th. Right, we have this, I believe it should be 60 and 50 once again. So let's keep out 50 and 60, right? So we can see the pivot level at 1.0798 also has the presence of a 50% Fibonacci retracement as well. So we've got a 50% Fibonacci retracement, this overlap level at 1.0798. The upper trend line of this bearish channel and the bearish Ichimoku cloud all pointing or highlighting a potential resistance zone that's around here, right, which is about 1.0800 all the way to about 1.0830, right, roughly around here, or 1.0820. A pretty strong resistance zone here. So with dollar index pulling back, right, which that might likely to continue for the rest of the day, euro is likely going to push up over here as well. Now, of course, fast forward to tomorrow, and if the euro continues to trade around here, around this level at about 1.0820, and then we see PPI come in hotter than expected, that's quite likely going to cause a bearish reversal to take place, right? And then bearish reversal to takes place, right? Then we can target the first support here at 1.0728 as the first take profit level. Conversely, the second take profit level here would be this pullback level at 1.0664. This is where we can target the second take profit level should we see the euro reverse around this strong resistance zone here and drop lower. Right, okay, now let's move on over to the pound, right? We've also got and then we'll cover Aussie as well. Okay, we'll cover Aussie as well after this before moving on to the commodities. All right, so okay, so similarly, I'm on a daily time frame here. You can see the market structure between the pound and the euro is very similar, right? Of course, you would expect them to have exhibit similar market structure, and at the same time we can see it is trading underneath the bearish Ichimoku cloud, and there's a pretty decent bearish, if not bearish channel, there should be at least a bearish trend line as well. Let's see, there's a channel that we can use. Okay, not really, the channel's not really that great, but we can still use the we can still use a bearish trend line here, right? We still have a descending trend line that we can use to identify a resistance area, right? So pivot has been identified as a pullback resistance, which is at 1.2564. So this level also lies within or close to this ascending trend line. Plus we have the bearish Ichimoku cloud offering identifying another potential area of resistance at around 1.2600 as well. There's a Fibonacci retracement that we can use, of course, right? It's going to start from here, this high on the 8th of March, going down to the swing low on the 22nd of April. Let's just pull up all the fibs first, right? We can see that there's a 50% Fibonacci retracement that aligns quite close to the zone that I mentioned earlier. So let's just keep 50% and just highlight this as one complete resistance zone here. Right, so similarly, right, we could see the pound or cable continue to drift higher today and tomorrow, and should we see PPI come in hotter than expected, then that's what's likely going to cause it to reverse strongly and drop all the way down. So should that bearish reversal take place, we can then use this first support at 1.2455 to identify as the first potential take profit level, and should price continue to drop even lower, then of course we'll use this swing low at 1.2328 to identify as the second take profit level here. All right, to the upside, there's a strong resistance level, I think around this at around the 61, right? I think there was one at a 61.8% Fibonacci retracement. Yep, if you look at it here, this is a pretty decent overlap as well, right? So this is another strong resistance zone as well for the pound or cable between 1.2670 and 1.2710. Alright, so these are the key levels for the pound on the daily time frame here. Now let's move on to the Aussie, since we've got Australia's labor force report coming up. Of course, there's still about 3 trading days away, right? Approximately 2 to 3 trading days away, but it's still important to identify the key support levels and resistances, because they may still be valid as that data point comes around. Now, when I look across at this level at 66.26, this is to me pointing out a strong resistance level here, right? We can see the Aussie running the resistance here at the end of January, running the resistance once again in mid-March, here as well in the third week of March, mid-April again, and of course in early May. So this clearly is a very strong pullback resistance level, which has been identified as the pivot, where it's quite likely we're going to see the Aussie stall around this region once more and reverse to drop lower. Right, so I'll probably just stretch this all the way back here to highlight this this resistance here as well. And okay, we have a 50% Fibonacci retracement, right? And because we have the top of this wicks here, let's just highlight this as well here. Okay, in terms of support, right, there's also an intermediate support I would like to highlight, right? There's a pretty decent intermediate support level here. Right, you can see the Aussie running into resistance at 65.65 on 29th of April. It pulled back quite sharply, then reversed to break above it, and then last Wednesday, as it was pulling back, it did find support here on Wednesday and Thursday before bouncing higher once again. So this overlap support here is still pretty significant at 65.65, which is why I like to highlight it as a potential intermediate, or I like to identify it as an intermediate support. Now, what that means is if we see the Aussie stall around this level here, around the pivot, and reverse to drop lower, right, you can use this intermediate support as a potential first take profit level, and should we see a clean break below it, below this level at 65.65, it's quite likely we may see it drop towards 65 cents and perhaps even as low as 64.70 where the first support is. So first take profit level for any short Aussie trades should be targeted at this intermediate support at 65.65, and the next one should be at around 65 cents should we see this strong bearish reversal, or should we see the reversal take place and the bearish momentum extend even further. Right, to the upside, right, first resistance is maybe there's something in between, right? Maybe like first resistance is pretty far. Let's see if there's any other intermediate resistance levels that we can try and pick out. Right, maybe yes, this is pretty decent as well, right? At 66.76. I think I like to highlight this as an intermediate resistance that aligns very well with the 61.8% Fibonacci retracement here. So take note, we have a pretty strong resistance zone that's being bounded by the pivot, which is the pullback resistance, as well as the 61.8% Fibonacci retracement here. Right, okay, so these are the key levels for the Aussie. Then we'll move on to oil and gold. All right, okay, and of course, as we reach the halfway mark of today's webinar, right, do drop your request in early in the chat box, all right, so that we have time to go through the analysis together, right? I do not wish to rush through any analysis right at the end, right? Let's do it properly, so that's time so we can all appreciate the analysis. All right then, okay. Now looking at okay, so this instrument is XTIUSD. So this instrument tracks the WTI crude oil futures, right? So as you can see here, since making this high on early April, right, with crude oil or WTI oil hitting $88 per barrel, it's actually reversed to drop quite strongly, right? But however, it has found pretty decent support since last week. It's sort of it's stabilized at above $77 per barrel here for pretty much the whole of last week, and it does look like to be bouncing off this level once more again today. Right, so looking at this part of the move here, I also see a potential bearish channel as well, right? Maybe, okay, it's not the best bearish channel, but let me see if I can try and identify one. Right, okay, maybe, all right, you can sort of see here, it's not the best bearish channel, but yeah, it's just something like to highlight as well. Here we go. Right, let me just right, okay, this is a little bit better, so we can sort of appreciate this bearish channel a little bit more here. So okay, and yep, so you can see here in this case, initially last week, the bullish Ichimoku cloud in green, right? You can see the background here offered a area of support as well, helping price to consolidate. And although for now it does seem to be trading within this bearish channel, it's going to test the lower trend line of this bearish channel, as well as this pullback support at 77.77, right? This is a strong pullback support level here, with WTI oil finding pretty decent support here at the beginning of March, and of course last week as well. It's also a level that aligns well, that or rather has the presence of the 50% Fibonacci retracement, adding further significance to this support level here. Right, second support, or the main first support is at 72.31. Right now, okay, remember this pullback support has been identified as the pivot, and this other second pullback support at 72.31 that took place on the 2nd and 3rd of 5th of February is the first support as well, that has the presence of a 78.6% Fibonacci retracement as well here. Right, so for today, right, we are likely to see crude oil prices stabilize once again and potentially bounce higher, right? However, take note there is a pretty decent intermediate resistance level at around $80 per barrel, right? You can see previously crude oil running the resistance at $80 per barrel on 14th of November of last year, 30th of November as well last year, and of course this year as well, early March, and last week as well, as price tumbled quite strongly in the first week of May. Then as it started to retrace higher last week, it failed to break above $80 per barrel here. So there's an intermediate resistance level as well. So we could see price consolidate between $77.70 and $80 per barrel here for the next 1 or 2 days, right? But however, take note on a longer term trend, it is still trading within a bearish channel, so it may rise up as high as the upper trend line of this bearish channel before potentially running out of steam. right? But for now, the opportunity does look to be for a short-term bullish bounce for WTI oil, and where we can target a potential take profit level on the long side would be around the region of $80 per barrel here. And looking at the pivot, right, we'll be identifying our stop loss at a level just slightly below the pivot, maybe about 20 to 30 cents just below the pivot level here would be a suitable stop loss level for any opportunity to go long or to take advantage of this potential bullish bounce for WTI oil for today and tomorrow. All right, okay. With that, then let's just move on over to gold. Right, so the ticker symbol here is XAUUSD. Of course, this is the ticker symbol for spot gold prices, and we can see here we had identified the pivot point as at $2,360 per ounce. Right, this is a pullback level here. Right, you can see last Friday, gold prices ran into resistance around this region here. Let me highlight this as red resistance, right? This should clearly be resistance here, and it was also previously a pullback as well, right? There's a pullback support level here on 15th of April, 17th of April, right? So this was pullback support level back in April, then proceeded to function as resistance in May, thus creating an overlap resistance here, which has been identified as the pivot, which also has the presence of a 61.8% Fibonacci retracement, right? We have the presence of a 61.8% Fibonacci retracement, highlighting a strong resistance zone here. Of course, the first major resistance is at $2,432 per ounce, which of course is the all-time high for gold. Now, should we see gold prices continue to slide lower, take note we've got the first support at 2,285. We've also got the bullish Ichimoku cloud. Remember, the cloud itself can offer support, right, or help us at least identify a zone of support. And also, I see another intermediate support at around 2,328. Right, so previously this level was a pullback resistance that was in place from 1st of May till the 8th of May before finally breaking higher, of course. Now, should we see gold prices continue to retreat, and if we do see a clean break below this intermediate support at $2,328 per ounce, then of course we might see that could be the potential signal for further bearish downward action all the way down towards the first support, which is at around $2,285 per ounce. Right, so these are the key levels for gold. There may also be a Fibonacci retracement. Let's check it out. Let's start the retracement from here. This low on 14th of February going up to the all-time high. Is it the 38% that may be of use? Well, it's okay. It doesn't align exactly well, but okay. What about 23? I just want to check something out. No, definitely not 23. Okay, but maybe we'll just keep 38% here. Just give us some indication there is maybe a little bit of wider support zone around this region here as well. All right, so these are the key levels for gold, right? Gold seems to be selling off pretty strong today, and should you already be short on gold, right, your first take profit level can be identified at this intermediate support at $2,328 per ounce. And should we see a clean break below this level, that's that's quite likely going to accelerate the downward momentum, and then we can target the region of the first support as your next take profit level, which should be around $2,290 per ounce, right? Or even here, I do probably, just to be a little bit conservative, probably between the next take profit level should be around between $2,300 per ounce and below, right? So first take profit level should be around $2,330 per ounce. The next take profit level should be 2,300 and beyond. All right, okay. Right, are there any other? Okay, let me see if there's anything coming in. Okay, if not, let's just move on over to the indices. Let's cover the indices as well. We'll start with okay, let's look at US 500. Right, remember, US equities along with other major global equity markets have staged a pretty significant rebound here, right, after correcting in for most parts of April, right, or rather the first half of April. The markets pulled back quite strongly. S&P 500 has found support around 4,900 to reverse and bounce quite strongly here, making an attempt to surpass the all-time high, right? So take note, the all-time high for S&P 500, right? Okay, first of all, US 500 is the instrument that tracks the S&P 500 futures. So for the futures, the all-time high is at about 5,282. It's probably going to retest this level in the next 1 or 2 days, right? It's quite likely given the strong bullish uptrend that we see, and with price also trading above the bullish Ichimoku cloud as well, right? So take note, the pivot at 5,263 has been identified as a pullback resistance that lies quite close to the all-time high. We may potentially see price stall around this level here, pull back a little bit. Maybe it may find support just above the bullish Ichimoku cloud. If not, it should find support at this overlap level here at 5,117. You can see this is a pullback support level here back on 15th of March, and then we see a resistance here right at the end of April, thus creating an overlap. So we have a pretty strong overlap support level here at 5,117. So so this pivot here is probably marking a point where the US 500 could stall, pull back a little bit, find support maybe around the cloud, maybe just at the top of the cloud, or perhaps if it goes any deeper, it should find support at around 5,120. Right, let's see. I think it's a Fibonacci retracement that we can use, starting from this swing low here from 27th of October 2023, going up to the all-time high. Is there 23% that we could use? Okay, no, 23% is here. It's already gone beyond it, right? That's fine. Okay, let's not use that. That's not necessary. And then the second major support for the US 500, I like to identify it here, of course, at 4,956, right? We can see a nice pullback here that occurred on 14th of February, another one here on the 20th, and of course, this swing low here that occurred on the 19th of April as well, right? It's a pretty strong support zone for US 500. Right, to take note, the bullish momentum is still, or the bias is still to the upside. We are still seeing strong bullish momentum here, and perhaps over the next 1 to 2 days, it's quite likely we may see US 500 at least attempt to hit its all-time high once more. Okay, then let's look at DAX, DE40. Similarly, we can see DAX has surpassed its all-time high that was set in early April. Right, the previous all-time high was at around 18,571. It's gone as high as 18,850. It's pulling back a little bit today, right? So since we don't have any other level to reference, right, in terms of for the DAX, we use the Fibonacci extension levels to help us identify the next potential resistance areas. So we found these extension levels by running a retracement, right? Started a retracement from the all-time high, the previous all-time high on 2nd of April, going down to this swing low here on the 19th of April. We used the key extension levels at 137% and 161% to help us identify the pivot as well as the first resistance here. Right, so you can see here the pivot does seem to be functioning as some sort of resistance zone now, right? When last Friday, DAX coming as high as 18,850 before stalling and pulling back a little bit, and today as well, it did try to climb a little bit higher but has proceeded to pull back. Now, where it could find strong support would be at this previous all-time high, which is at around 18,570. Right, this is a pretty strong pullback support level here as well. Let's see, I think there's another retracement which we can run. Right, do we see a 23% aligned very well with the first support? There is another second pullback support here, might be around the region of this 50%, yeah, probably around 50%. So let's just keep 23 and 50%. And we have the second support around here. Right, so once again, similarly to the US 500, DAX or DE40 is also in a strong bullish uptrend. It's trading above the bullish Ichimoku cloud. The cloud is in green. And the cloud itself can help us identify an area of support which happens to align very well with the second support and the 50% Fibonacci retracement. Similarly, for the first support is a strong pullback support at 18,570, which also has the presence of a Fibonacci retracement at 23.6%. All right, now, of course, should we see price reverse off the first support and break through the pivot, right? If that were to occur, then the next resistance level that I can identify would be at the extension at the Fibonacci extension at 161%. Now that's at 19,295. Of course, this is quite a well away distance from where the index is currently trading, right? But it's just a potential resistance area that we can identify and target for future take profit levels as well. Now, should we see the DAX come close to the first support and reverse the bounce higher, that may help us identify a potential long entry as well, a potential bullish reversal or long setup to ride this momentum here. And should that bullish reversal take place around the first support, then we can use the pivot to identify a suitable take profit level. All right, so these are the key levels for the pivot here. All right, okay, just in the meantime, I'm just going to launch a poll as well, right? Truly appreciate it if you guys can give your feedback as well. And then after that we'll continue with the rest of the webinar as well. All right, so I'm just going to launch a poll. Truly appreciate you guys can give your feedback as well with regards to today's webinar. And then we'll just continue with the analysis as well. All right, okay. Now moving on, let's see. Okay, we've covered most of the majors, some commodities, the indices as well. If not, let's see what else can we do. Then let's look at dollar yen. Of course, let's look at dollar yen. Right, we saw intervention measures in the first week of April. The first week of May, that's caused the dollar yen to pull back quite sharply. Right, we can see it hit a high of 160 briefly on 29th of April. And that's when the first suspected intervention measures took place, and then followed on 1st of May as well. So during this period here, the Bank of Japan has spent approximately about 24 billion US dollars to strengthen the yen. So when they strengthen the yen, right, they're actually buying back the yen in the open market, and when that happens, the dollar yen is likely to is going to pull back very sharply, as what we saw 2 weeks ago. However, it did find strong support around the 152 level, and looks like it's going to go, and it has retraced higher quite clearly. Now the pivot has been identified at 156 and 26. Right, this is a pullback resistance level here. I believe there's also a Fibonacci retracement that we can use. Right, there is one, and right, this pullback resistance level line has the presence of a 50% Fibonacci retracement here, so we could potentially see the dollar yen stall around this region here. Remember, should dollar yen continue to rise, it raises the probability of the Bank of Japan intervening in the open market once again. And should that happen, we are likely to see high volatility for dollar yen, which large spikes, downward spikes, as what we saw in the first week of April. All right, okay. Of course, the first resistance is going to be at the top of this candle here, right? The body of the candle here, the close that took place on 26th of April, which is 158.29. Pivot, we just talked about it, and we see strong support at around the 152 level as well, right? So this level here, right, a strong support level, and probably just highlighted as a zone, right, from 152.80 to also from 152.80 roughly all the way down to 151.93 here. Strong support zone, and of course dollar yen is also still trading above the bullish Ichimoku cloud. Right, okay, is there another Fibonacci retracement that we could use? Yes, I think there is. We're going to run the retracement from here. This swing low on 11th of March going up to the high on the 29th of April. There should be a 61% that we can use. Yep, there we go. as the first support has the presence of a 61.8% Fibonacci retracement level, right, which adds to the significance of this pullback here, which is now technically an overlap, right? Previously, this was a pullback support, right, running the resistance here on October 2023, running the resistance once again in mid-November of 2023, oh, right, yeah, and then running the resistance here and towards the end of March, early April, before finally breaking higher. And of course, finding strong support here on 3rd of May, Friday, which finally creates this overlap level here. So we have a strong overlap level at 151.93, which we have identified as the first support. All right, okay, we've done dollar yen. Let's see what else can we do. Right, okay, let's look at dollar franc. Let's take a look at dollar franc, right? Similarly here, dollar franc has since been a strong uptrend, right? Especially after the surprise rate cut. Remember, there was a surprise rate cut by the Swiss National Bank in early March, right? So this caused the Swiss franc to weaken significantly, which of course means dollar franc is going to rise strongly. So since then, it's risen from about 88.50, going as high as breaking above 92.20, right? So this is a major resistance here, right? You can see dollar franc making a strong swing high resistance here at the end of September 2023. This is a very significant swing high resistance, which is where price has once again run into stalled as well on the 1st of May. Right, so that's how the first resistance has been identified. Right, and in terms of pivot, right, we see a strong pullback level here at 89.97. Right, we can see dollar franc finding support on 5th of April. Even here, we can argue 19th of April and as well as on 3rd of May. Right, 3 times dollar franc has found support just above this level here, and the currency pair is trading above the bullish Ichimoku cloud as well. Remember, the Ichimoku cloud can help us identify strong areas of support as well. So we have the Ichimoku cloud, a pullback support at 89.97. Let's see if there's a Fibonacci retracement that we can use. It's quite likely to be one. Let's try and identify it. So we'll start it from here. We'll start the retracement from this swing low on 28th of December, going up to the high on the 1st of May. Let's pull up all the fibs. And we can see, yes, the pullback support or the pivot at 89.97 also has the presence of a 23.6% retracement, as well as the second, as well as the first support has a 38.2% as well. So let's keep 23 and 38.2. Right, so we could see dollar yen continuing to climb higher. So should we see it pull back even further, we may get even better buying opportunity that's bounded by the bullish Ichimoku cloud, the pivot itself at 89.97, as well as the retracement at 23.6%. Right, so take note, any deeper pullback in dollar yen may help us identify an even better long opportunity, a long setup, and then we can target. There's several intermediate resistance levels that I see. One is here at 90.89. There's intermediate resistance level here. Right, previously this was support back in the 3rd and 4th week of April, and then in early May it was resistance as well. And there's another intermediate resistance that I see at around 91.46, right? So take note. So should we see dollar franc continue to go higher, right, I would use the first intermediate resistance at 90.89 as the first take profit level, and the second take profit level will be identified at 91.46. There may be even a Fibonacci retracement that we could use here, starting from this high on 1st of May, going down to the low on the 3rd, and it's the 38, and I believe it should be 61. Yeah, we have the 38 and 61% here that align well with the intermediate resistances. All right, okay. What else can I see? All right, no. So dollar franc is elevated. It's going to continue, quite likely going to continue to be so, right? Especially with inflationary pressures remaining sticky and persistent in the US, while the S&B looks to have gotten the ball rolling with regards to rate cuts. So we have a potential divergence in monetary policy action, right? The Fed is going to is going to maintain the Fed funds rate at the current level, right, 5.25 to 5.5%, while the Swiss National Bank has embarked on a rate cutting cycle. So this divergence in monetary policy action is quite likely going to keep dollar franc elevated, and any pullbacks could be a good opportunity to identify for the long trade as well. So for any long potential bullish bounces for dollar franc. All right, okay, done that. Let's see. Okay, let's maybe just look at the Kiwi. All right, let's take a quick look at the Kiwi. Right, similarly, we see trading below the bearish Ichimoku cloud. I also see a strong pullback resistance that has been identified by the pivot at 60.59 here. Right, so we have the presence of first three things. We've got the Fibonacci retracement at 61.8%. Let me see if I can label this a little bit more clearer. Right, we have the 61.8% Fibonacci retracement. We've got the pullback resistance here that took place on the 10th of April, and we've also got the bearish Ichimoku cloud here. So three factors that are identifying a pretty significant resistance zone. So Kiwi is likely to be kept under this level here, is restricted under this level here, and I see an intermediate resistance at around 59.84. Now, if this level gets taken out, and if you see the Kiwi reverse around current levels, maybe it won't reach the pivot here, but should it just reverse around the current levels here at 60 cents, right, a clean break below this intermediate support at 59.84 is quite likely going to cause this cause further downside action, and we may see the Kiwi drop at least towards 59.50 as well. So take note, this intermediate support is going to be key, and if a clean break below this is likely to see further downside action for this currency pair. All right, okay, then all right, first resistance is the pullback that occurred here on the 23rd of February and 8th of March as well, which is at 61.97 or pretty much 62 cents here. First support is here, right? Is there anything else that we can use? Probably I can use a Fibonacci retracement, this time from here, 1st of May, going up to the high on the 3rd of May. Right, let's see, is it the 38 that aligns well? Right, we have the 38% here. That aligns pretty well as well. So let's keep the 38%. There we go. And let me see if I can just make the labeling a little bit more clearer. No, it doesn't help with the candles over here. All right, okay. But generally, you can see this is a pretty key intermediate support level, and a clean break below it may trigger us further downside action. Remember, we see strong resistance areas highlighted by the bearish Ichimoku cloud, the pivot at 60.59, as well as the Fibonacci retracement at 61.8%. All right, okay, so let's see what else. We've got a little bit of time. Let's see if we can do one more analysis before we wrap up today's webinar. Let me see what else can we do. Let's see what else. Okay, let's cover US Tech. Let's wrap up with US Tech. So US Tech is an instrument that tracks the NASDAQ 100 futures. So let's wrap up today's session with this analysis. Right, so just like with most other equity markets, they found a strong bottom, or they could and they rebounded in mid-April, and they've been climbing higher steadily over the last few weeks. Now the all-time high for the NAS 100 is of course at 18,474. So this is a major resistance level here. So the first resistance has been identified here at about 18,334, close to the all-time high. Right. Now, why can we identify the next resistance level here? Right. So in this case, I would say this resistance is going to be my pivot. Right. I'll identify this as my pivot here. Now, how can I identify the next resistance? Right, we can use Fibonacci retracement from the all-time high to the low here on the 19th of April. With this retracement, I'm going to look for the extension levels. So the key extension levels lie at 127 and 161%. So I would be using the 127% to identify my first resistance here. So the first resistance, remember, with the NAS trading close to all-time highs, there's nothing in the past that we can reference, no pullback resistance or swing high resistance that's going to help us identify the next resistance level. So we're going to have to rely on Fibonacci tools. So in this case, we're going to be looking at the Fibonacci extension levels at 127%, and the next one would probably be around 161%, but that's way off from where the index is currently trading. Now, what about support? Okay, I see a nice overlap support at around 17,790. Right, this level was previously support on 29th of February till the 19th of March. Consolidated here for a little bit in mid-April, ran into resistance on the 30th of April, creating an overlap. Right, so this is how the first support is identified, which is the key overlap support level. There's also a Fibonacci retracement that we can use, this time from here, this swing low on 26th of October, going up to the all-time high. Right, okay, there's no 23, can't be used, the index is broken below it. 38 may be something to keep note of as well, but that also seems quite unlikely with how the index is currently trading. But should we see a much deeper correction in the future, right, then this pullback support here, or this swing low support here, together with this 38.2% Fibonacci retracement, would identify the next major support for the NAS 100. All right, okay, so that's what we have for today. All right, thanks everyone for tuning in to today's webinar brought to you by IC Markets. Right, we'll just wrap up by looking at the calendar. Take note, it's a pretty heavy calendar as well, but I just want to point out PPI data and CPI data that's out on Tuesday and Wednesday, 12:30 p.m. GMT time. Inflation data is always going to inject higher volatility into markets. And we've also got Australian labor market data on Thursday, 16th of May as well, plus other data points such as China industrial production and retail sales figures. Chairman Powell speaking tomorrow as well, and of course US retail sales too, and of course the labor force report by out of the UK, that's tomorrow 6 a.m. GMT time. All right, and we'll just wrap up with the ending disclaimer. All right, so thanks everyone for tuning in to today's webinar. Do look out for all upcoming webinars by IC Markets for the rest of this week. All right, thank you all for tuning in. Have a great trading week, and I'll catch you all at the next analysis. All right, thank you.